the first day of Jackson Hole. As you already know, it literally takes 3 days. So we will finish. Will be finalized on Saturday. So we decided ahead of the first day of the Jackson Hole to provide you this live analysis. So today we're gonna go through the our charts. We're going to do a market analysis, and we're going to explain how it might affect the markets. Any announcement from Mr. Powell tomorrow in regards to a change in the change or a non-change in the policy. So what we have seen so far. Let me just double. Okay. What we have seen so far is a bit of a defensive market, so a lot of cautious ahead of the this event. Actually, even though it's expected not to be an uneventful event. So, however, there is still the concern whether Mr. Powell will actually announce any tapering plans, especially after the Bank of Korea wrong-footed most commentators with an unexpected rate hike just today. So we have seen since the beginning of the week stock markets in US, in Europe, in a bit of more generally defensive stance, other than. And other than a more price-in condition ahead of a potential tapering of the policy of the Fed policy. So very narrow moves, a lot of cautiousness ahead of the Powell speech tomorrow. So Mr. Powell will be on a virtual event. Actually, he's not actually visiting Jackson Hole. And that was another change that we have faced for the first time ever. So for the time being, we have seen European. Let's start with the European stocks. A bit lower ahead of the event. DAX was lower, FTSE was lower, lost around 0.4%. Dow Jones was also the one that managed to bear early losses so far today. Today, in contrast, of course, with Nasdaq and the USA 100 and the USA 500, so Nasdaq and S&P, which in general were in a rally this week. Even though if you check today's performance, they also turned slightly lower. But overall, their performance as we're moving into the end of the August, their outlook was they actually managed to proceed to further gains, to extend their rally, and to post further record highs. So S&P 500, USA 500, USA 100, they keep posting, as you have seen yesterday more precisely, fresh record highs. In contrast, today their performance today was a bit disappointing. So they were under pressure, and that the reason behind that was the fact that we had declines in technology stocks. So this was the main driver of USA 100, USA 500, because they are tech heavy indices. So a bit of a pressure has been seen today due to the declines in technology related stocks, and of course this mood of this defensive mode in the market, it was further strengthened from the worries over the global spread of Delta variant, as we keep seeing globally actually the continuation of the spread in the Delta variant. So that was something that we have seen their stock behavior, the equity market behavior so far this week. But let me just turn a bit on what's going on in the currency market. So we have a quite heavy dollar. So I will share my screen with you so you can follow me in regards to the currency pairs that we're gonna cover. Just give me a second so I can see your question, guys. Okay, let's start with that. You're right, Crystal. Before we see the charts, let's start on how the Fed Jackson Hole more precisely affect could affect the market. So give me just a second to sort this out. Guys, you can ask anything you want. I'm here to reply to all of the questions that you have and to cover any asset, to analyze any asset um, that you want me to cover actually. So I'm here for you and you can ask anything you want. Okay, you lost me actually. So now, okay, perfect. We have finally done the setup. Okay, in regards to the Fed, actually, it was expected initially, the Jackson Hole symposium actually got a lot of traction because the last 2 months, the expectations of the markets in general ahead of this event, it was that Mr. Powell could actually announce during the Jackson Hole the tapering of the policy. However, the event actually the things change along due to the spread to the spreading of the Delta variant, and with some disappointing data as well, but more or less due to the concerns around the pandemic was again. So the the expectations on whether the Fed could actually proceed to tapering, to further tapering, actually decline. So the odds of announcing something like that today or even tomorrow are very very low. This has been shifted to November's meeting. So for the time being, what is expected if we consider the July minutes? So, just to remind you that in July, we have seen the Fed indicating that many of its participants, many of the Fed members, were actually preferring, or they favored reducing asset purchase this year. However, due to the increase of downside risks, as I mentioned, the numbers were quite the economic data numbers that we got, guys, weren't so strong as it was expected. Also, is the situation with the COVID once again. Also, is the July jobs as well. So all these added a bit on the downside risk on Fed, and that's why tomorrow we don't really believe that Mr. Powell will give any clue, given this increase, as I mentioned, in downside risks. So even if we run back to the July minutes, we could see that there is a bit of a mixed situation, a mix of views across the Fed. So there are some supporters of the reduction of asset purchase. There are people that are actually supporting that no action should be taken for now. And so there are others that actually they're actually pushing for a rate hike. So for the time being, what is expected is Mr. Powell not to do anything, actually, to keep things as they are right now, because let's not forget the Fed's key uh, data, where they mostly focus on, is on the jobs. So they will probably want to see August jobs report as well before they take a decision. And this view, these expectations that we might not see anything from Mr. Powell and anything from Jackson Hole tomorrow. So no hints over reducing asset purchases. This is something that supported the Wall Street, something that supported the stocks. So if so, ahead of the Jackson Hole, the expectations that Mr. Powell will come out and actually repeat what it said back in July, so no action to be taken, is something that could keep supporting the stocks, okay? Keeps to helps last week's and this week's rally on Wall Street, okay? But sorry, but this could actually stabilize dollar, because dollar right now, as you can see, okay, it's okay, here we are. This is a daily chart. You can see that ahead of the Fed, we have seen a pressure in the market. Right now it's moving sideways. So if no action is taken and there is no hint, or they said that we won't take any action until we, let's say, we convinced that jobs, the labor market has been stabilized, then if they mention something like that, this could actually add, either stabilize a bit now, a narrow sideways move for dollar, or even precious dollar even more. Only a hint about a reducing of asset purchase, or even a hint of rate hike, could help the dollar for the time being. Okay, so yeah, this could be negative, no action, or even highlighting further downside risk could pressure dollar, while a hit ahead of any hint in regards to rate hike and tapering and so on and so forth could support dollar. But for the time being, dollar remains quite heavy. It's near, as you can see, let me just put the 1 hour chart. I'm sure that you can see my screen there. Good afternoon or good morning, everyone. Depends on where are you. Good evening. So someone needs gold. Okay, soonish. Oh, many of you are asking for gold, Nasdaq. Okay, we're gonna, as soon as we're done with the dollar, we're gonna shift to commodities, and as many of you are asking for gold. So what I was saying about dollar is that this week was quite heavy, as you can see, down to nearly like August lows. Support keeps, however, a support at 20-day moving average. Okay, so 92, so a bit of a it found some footing on the 92 area, and more precisely 92.70 is a nice 3-day floor for dollar, but is still below actually 2 months highs, and is very close to the bottom of August performance. So something that actually is also associated with the pressure on dollar is also the treasuries. Let's not forget that is negatively correlated with the treasuries. So what we have seen is that we had a shift, we had a lift on treasuries. So that is something that encouraged some cash out from dollar, and a shift to other assets. So, and in general, is the overall is this overall uh, backdrop, but the backdrop of this overall improved risk appetite. So that's why um, um, we have seen other assets benefiting while dollar is under pressure. And let's not forget that is what I said initially. It's the expectations. So people, we have seen actually in dollar a pricing in, okay, already before the event. So people were actually trading because they strongly believe that Fed that Mr. Powell will announce a quantitative tapering time frame in the Jackson Hole. So there was a pricing out of these expectations. So sometimes we're seeing markets reacting um, before the event and not during the event. So they are pricing in what is expected, their expectations for that particular event. And it's not solely for the Fed, but we sometimes see pricing in ahead of an FP or ahead of, I don't know, an important event and so on and so forth. Um, so more of the same is what we expect to see tomorrow as well, because I think Mr. Powell will be live tomorrow. So today we might see some comments from Fed officials, but um, yeah, Powell will be tomorrow, if I'm not mistaken. So as I said, we believe the Fed will. We need to see the August jobs as well before deciding on a course of action. But yeah, as I said, just to simplify things, if Mr. Powell comes out with no action, okay, this is expected to add pressure on the dollar. If, however, even if is coming out, if he states that there is no action to be taken, but he actually clearly states a time frame, so when the Fed will actually proceed to a tapering, then if it's anytime soon, we might see the dollar being supported and maybe having some kind of a rounding bottom before it extends higher again. So this is what is expected, how the dollar could be affected from the Jackson Hole. Now, okay, you're asking about gold. So I will not cover the ECB minutes now. I will cover what happened with the ECB minutes as soon as we analyze euro. So let's shift to gold since you're asking for it. So let's start with gold then. Perfect. Okay, guys, this is my daily chart. As you have seen, this is the daily gold chart. As you can see, it declined for 3 days in a row since it rejected and actually failed to break the 1815, 1810 territory over here. So let me just put it 1809 more precisely. So let me just clear a bit this mess. Perfect. So we have seen gold actually being in a decline mode since the beginning of May. Uh, the only condition in order the negative outlook to change if it manages to break this 3 months resistance between the 1820 and 1813 territory. But once again, the asset posted another lower high and it turned again lower. So right now, flirting with the 20-day moving average, 1785. The momentum in the daily chart is negative, but very close to zero, something that suggests consolidation, so a neutral outlook in the daily chart. While if we zoom in and turn into the intraday picture, the asset remains negative. So the next real support intraday, at least in the short term for the gold, is this two double bottoms, double low fractals at 1783. So a break of it and a closure, and actually it's touching it already on the US Open, so it broke it already. So this breakout is turning the attention to the next resistance, to the next support level, sorry, which is pretty much on around 10 another around 7 8 pips $8 precisely lower. You can see is the support area seen since the mid of August. It retested this area several times, so this is actually presenting the next immediate support level for gold. And okay, just so the reason why we've seen dollar actually turning lower this week and extending losses into a third day in a row, it was once again it has to do on the uncertainty of the Fed strategy on tapering. Even though dollar was weakened, this is expected to support the gold. However, gold extended losses as the dollar and the treasury yields were firmed. So, is this an uncertainty that actually kept gold investors on the edge rather than the weaker dollar? The weak dollar should have support gold, but instead it didn't react as a safe haven asset, but also depreciated because of the, as I said, the uncertainty. So we have seen declining away from the psychological 1800s territory. $20, nearly $20 lower. Next up, port 1776 for the time being, for the day, intraday, near term support. So in this 4 hour chart, you can identify easier this support level that I was talking to you about. So is a repeatable fractal low, is a repeatable retest lower, and it's also clashing with the lower Bollinger Band area. So next support 1775, while a decisive break below that, it could be quite a free fall to 1750 or even 1720 territory. So use your Fibonacci's. They could help you with the next immediate support levels if the asset continues moving southwards. So you can see how significant this 1776 area is. Clashes with the lower Bollinger's 38.2 Fibonacci level and 5 consecutive low fractals. So next support level for gold. Um, So just before we move to another asset, just to remind you that gold is a hedge. It's an asset that is being used as for hedging against inflation, right? And it's also a currency debasement asset. So it tends this nature, the fact that it's been used for hedge funds, hedge against inflation, sorry, and it tends to result from this widespread money that central banks were printing, literally printing, in order to face the pandemic crisis. So, an interest rate hike by the Fed would actually do the gold. Okay. So the gold, it tends to be sensitive in regards to any change that we're gonna see in the interest rate, in the interest rates of a country, and especially the United States. So an interest rate hike by the Fed will doubt the gold's appeal compared with interest earnings assets. So this was about gold. Any other question about gold, guys? So intraday negative outlook, pressures on the downside, RSI below 50, stochastic keep extending lower. As you can see, it's pointing low. No, you can't see it because my face is in front. Let me just. Oops. Can you see stochastics over here? A bit of a correction and then continue lower again. So negative stochastics. MACD is ready to turn negative. This is a 4 hour chart. RSI keep extending lower, suggesting that there is further selling pressure. If we moved into the 1 hour chart, the same situation, even worse. So you can see that intraday momentum is on the seller side. There are a lot of pairs pressuring the asset lower. MACD negative, RSI had a peak and then it's turning lower. So we have a bearish crossover here. RSI the same, had a peak over here, didn't manage to break the 50 level and it's turning back down again. So negative picture from gold, while the daily chart is again the same, neutral to negative. For the time being, there is no shift to a positive, to a potential rally of gold, but instead there is like pressure on gold. Um, welcome, Nim. So pound. Is there anyone that needs something further about gold? Did I? It's going to receive major. True that. If we actually see a rate hike, but uh, yeah, actually, if we see a rate hike, then this could suggest further decline for gold, but this is unlikely. I mean, a rate hike is not expected. Um, Pretty much there's no action is expected from Mr. Powell, but this instead this could actually help the gold if no action is taken, because we might see a bit of a safe haven uh, sign. Uh, so on the weaker dollar, of course, if dollars also turn weaker. So let's shift to pound. It was Linda that asked about pound. Okay, let's shift to pound. Here we are. This is a daily chart. No one asked about Swiss and Euro, which are the strongest and the weakest currencies so far today, but we're gonna cover them in a second. So in regards to pound, guys, let me just double check something. Uh, so pound, gold, nothing else, no other. Please stick in the comments box below the live, either in YouTube or in Facebook, your questions. I can see only questions about gold, pound, and what else? And Nasdaq, and Europe. So any further assets that you want me to cover, I'm here for you. So let me know as soon as possible. So cable, pound. So we have seen, so here is a daily chart. I will zoom out a bit just to see the overall picture. You see that for the whole year, okay, this is just in the long term, just to remind you where we are standing. This is the year's performance. So you can see that cable is pretty much in a narrow range the whole year. So the long term is sustaining some kind of a sideways movement. Okay, right now it actually is on the bottom of this channel, of this of year's channel. So it's at the bottom. This bottom was retested twice in a month, so created some kind of a double bottom. And remember that if we have a ranging market, so if our asset is moving sideways within a range, a particular range, the if it's at the edge of each range, either below, either the bottom, either on the ceiling, we tend to have rebounds. We tend to see rebounds because um, uh, there is a mean aversion, so prices tend to have if they are in an extreme, if they have an extreme move or they are on the edge of their range, they tend to go back to the average price. So usually at the bottom of each range, we see a rebound. So this is what we have seen the last few days. So this week we had a rebound of cable from the 135. Let me tell you the precise number. From the 135, the 36 level, we have seen a rebound up to 137.70. So this is, it has edged out the 10-day high at 137.67. And this was actually clear reflection of dollar weakness, with markets having pushed back Fed tapering expectations. So again, if Mr. Powell came with a tapering time frame and he pushed the tapering at the end of the year or even next year, then this could be negative for dollar. So positive for the other currencies, such as pound, for example. But um, uh, but in general, the outlook of pound is positive, neutral to positive. Even though it's moving sideways, it's been sustained to the highs, to the high territory of the last eight, nine, for the last come on, 4 years in a row. Is in the high territory of the last 4 years. So we can see pretty much a neutral to bullish view on the pound, and because let's not forget that uh, that UK is doing quite great in regards to the vaccination rates. Also, it had some positive um, feedback from the reopening of this economy. So, this is something that supports, as I said, the pound. We have seen also. More or less affected by the high vaccination rate, but also the overall the economic data suggests that UK's recession has been stabilized and it gives some signs of recovery, even though there were some data that were actually showing a moderation of the in the pace of economic growth for UK, but this is happening all over the world and not solely on UK. So we might see a bit of a pressure if there is a continuation of this of this undershoot of expectations in the data, but overall the UK data uh, actually suggest an economic growth, but an economic growth that has currently stalled at least for the summer. So we had the PMI surveys, we had retail sales, we had consumer sentiment that shows some kind of an unexpected near-term contraction. So this might keep a bit of a ceiling for pound, but overall, the pound outlook looks neutral to bullish, as I already mentioned. So 1, 2, 3 days in a row to the upside. So far today, it reversed all the gains that we have seen. Yesterday, but the outlook remains mixed. The momentum remains mixed. So we might see some sideways move because, as you can see, RSI is a bit flattened. MACD negative, but there is no extension of the histograms below the signal line, so that doesn't really. Oops, sorry. Let me put the MACD again twice, so you can see that even though MACD is negative, um, there is no an extension southwards. So this implies that we might either see some consolidation or this might be a decrease on the bears, a decrease on the selling pressure in the pound. So this is positive. But let's wait and see. For the time being, is at 137 17, still below the 20-day moving average. So as soon as we don't see a move and a sustained move actually above 20-day moving average, the outlook remains neutral for pound. So if I get rid of this rectangle and just to find the midline, average the mean line of this channel, it will be at 139 if I'm not mistaken. Yes, 139 is the midpoint of this February, March, April, May, June, July, August of this 7 months ranging market is in the mid. So if the asset managed to break the 20-day moving average, this is the next key resistance area for the asset. While a break of it could turn the attention back to the highs, and we are referring to 300 pips higher, 142 high. If, of course, pound managed to move above the 139 level. That's in the long term. For the time being, as you said, it's a bit neutral. So, intraday, 1 hour chart, neutral again. Even though you can say that okay, it's moving lower and lower, you can see that momentum is already running out of steam. MACD is zero, so uh, there is a lack of a direction over here. Stochastic is turning again lower, but that implies to a very short time frame decline, maybe in the next few minutes or even an hour. But still, the momentum is a bit weak to the downside. So we have seen in the US Open, this is the US Open, and this actually another attempt to the downs to turn lower. So the next immediate support level will be 136.95, so around 17, 23 pips lower. But yeah, it's expected that it will actually stabilize. There is so for the time being, there is not a lot of selling pressure based on the momentum indicators. So keep an eye on it. Let me see whether. So there was a bearish cross of the fast moving average in the morning. Keep slowly to extend lower, but there is not a lot of momentum. There's a lack of momentum. So it's already turned 68.8% of the gains of yesterday's gains. Not certain what's going on over here, but this is definitely the next support level with a double fractal over here. So it's actually 2 days, 3 days support area. 30 minutes chart. 30-minute chart down. So yeah, this is a selling pressure just just in the very short time frame. 30 minutes chart, 15 minutes chart, maximum an hour. This is a 30-minute chart, and you can see 1, 2, 3 bearish candles. They keep extending lower. So the pressure is just intraday for now, at least. So this depends on your time frame. We saw gold. Let's shift to euro dollar. Perfect. So euro dollar. This is the 1 hour chart. As you can see, this week the euro dollar tried to do another attempt to break the 20-day moving average. Didn't manage any turning. It has a pullback so far today, away from the 20-day moving average and the 118 territory. So we have the minutes, the ECB minutes, but it doesn't look like they have affected significantly the euro. So euro over here turned slightly lower. So it had a bit of a pressure due to the ECB minutes. However, it managed to sustain and move above the week's low territory. So if I just yesterday's actually 2 days low as well. So there is a double bottom over here. So a nice support has been sustained on Tuesday and Wednesday, but the asset is still very, very close to 1, 2, 3, 4, 5, 6, 7, 8, 9 to nearly 10 days a high territory. So for the timing, it's been sustained at the highs of more than a week's highs. So indeed, the ECB minutes turn added some pressure on the euro, but what actually added? Let me just haven't shown you the data so far, by the way. Because we had the earlier the claims out in the GDP of US, but yeah, there's not a lot of interaction due to the data. So euro dollars, as I was saying, dipped slightly lower, just around 25 pips lower from today's highs. However, as you can see, the daily chart remains at the high territory of the week, right? What is it? What we could do, what we could highlight from the ECB minutes is this distinction between rate guidance and asset purchases. So it seems that uh, there there was no intention. It seems like the ECB has no intention to necessarily signal low for longer stance. And this is something that clearly markets took it that way. Okay, so more importantly, perhaps, is the fact that the discussion also touched the today's discussions. So, like an hour ago or 2 hours ago, I'm not quite sure, but um, it's clear that the ECB minutes triggered a bit of a risk once again in the market, that the recalibration of the interest rates guidance could be perceived by the market as implying a longer period of net asset purchases, owing to link between rate guidance and forward guidance on the existing asset purchase program that the ECB is holding. So this um, this is actually strengthens the view of a more dovish rate outlook. Okay, remember, dovish outlook implies to weaker currency. So that's why we have seen this shift lower the last 2 hours for euro dollar. So some pressure was added, but the focus is really on September's meeting, and whether these anticipations from the market, this pricing in of the market that the ECB is holding a dovish outlook, could actually become true. Okay, so if they did become true, then we could see a weakening of euro. For the time being, despite this 2 hours decline, this pullback that we had seen. Here it is, 1 hour. This pullback that we had seen. The euro remains the strongest currency so far. So this pullback might have been affected by ECB minutes, but also let's not forget that we had jobless claims from US, GDP number from US. So as I can see from my calendar right now, the data, and especially so we had a bit of expectations in the continuing claims and initial claims, but this was so important as the second reading of the GDP for US, the second quarter GDP. So the second quarter GDP number in the US came out at 6.6% against the 6.7% that it was what it was expected. So let me see a bit of the breakdown of the data. So okay, so let me just. So 6.6 was the annualized number, while the actual GDP number came at 6.2% against the 6% expected. So it beat expectations. It beat expectations. Also, the annualized came higher than the first quarter's reading. And let me check a bit. That's something that could benefited temporarily at least the dollar. Let's see. Indeed, the 30 minutes chart or even 15-minute chart to see how it reacted on the data. So the data were released here and we can see this jump. So the bit of expectations, even though they were very, very close, the bit of expectations on GDP for the US is something that supported temporarily the US index. And that's why we have seen euro dollar pulling back. So it was a comp of ECB minutes and the dovish outlook, along with some strength, temporarily or not, who knows, let's see, of the dollar as well. So it's not solely euro and the ECB minutes, but it's more or less the GDP release in US as well. And Mr. Puland, the Fed Puland, which I didn't spoke to you about, but he came out where he actually spoke today in the CNBC, and he said that we have a lot of inflation in the US, more of it is expected. He highlighted that there are risks to inflation to the upside. So it's pretty much stating and staying in his story and insisting to start the tapering. Okay, so this is Mr. Bullen's comments. So analysis, technical analysis. This is the 1 hour chart in euro dollar. 1, 2, 3 consecutive candles to the downside. It's at the mid of 117. There is a bearish cross of the 5 and 9 exponential moving average over here. So this is a bearish signal with RSI slowly lower, MACD a decline as well. Sorry, stochastic pointing further to the downside. So intraday there is still further pressure for euro dollar. Next support for the asset could be this 200-hour moving average, so around 10 pips lower. And if that breaks, we have another nice floor, actually stronger support area at 117.26. So double low fractal over here. And this could provide some support if 117.40 doesn't manage to provide support to the asset. So let me just already down. Yeah. ATR is pointing to not 10. So this is on the 200 period moving average. So that's indeed looks probable. Nasdaq. Okay, you're saying 100. Here it is, very narrow. So we'll start with the daily chart here. It posted a fresh record high as the tech shares were in the rally this week. But this rally stalled yesterday. So even though since last week we had some strong bullish candle, the tiny candle on Tuesday and the doji candle yesterday imply that the rally is running out of steam for now. This okay. So today started moving lower. It's at 15 33. Of course, the overall outlook remains positive. You can see that it's keep extending higher and higher and higher with some corrective moves, corrective impulsive, corrective impulsive, corrective impulsive, and it keeps extending higher, posting higher lows and higher highs. So right now, the asset is actually started turning lower, so it might be a sign that um, it might search for a correction uh, after this fresh record high at 15. Let me just be precise, 15,400 territory. So after this new fresh record high, it's starting slowing, it's starting actually running out of steam. Next immediate support is could be found in the Fibonacci level, 15,235 or even 15,150 territory. Next support level, but the daily outlook, the medium term outlook remains positive. So intraday, we have seen sideways. So this is another way of correction. An asset, if it's overbought, it could be either move sideways, just as a correction move, or even do a small pullback. For the time being, the Nasdaq is moving sideways. So there are not a lot of things that we could say, just moving sideways, nothing interesting. As long as it doesn't break this latest low at 1529.5, then it's ranging, clearly ranging, not even lower, but okay, let's take it over here. So it needs to break that level over here, 15,295, in order to believe that it could move further lower. Okay, so this is the next support level. If, however, it rebounds and it actually breaks the latest high, of course, this implies to further extension of the rally, so fresh record highs. We have replied to this, we have replied to that. I'm good, thank you. And you, my dear Vicky, no worries that you're late anyways, recorded. So after we are done, after we finish the live, you will have it in the YouTube channel, in the Facebook channel as well, so you can start it from the very beginning. Actually, the calendar states, actually the Jackson Hole is today. It starts today. Today is the first day of the Jackson Hole. But if I'm not mistaken, Mr. Powell will be online tomorrow. So let me double check, guys. So let me double check. I think he will be on his feet tomorrow. Um, but let me confirm it for you. Okay, here it is. Yes, Friday. So Jackson Hole starts today and finishes on Saturday. But Mr. Powell, which is what we are focused on, this highly anticipated speech from Powell is tomorrow, and this is 2 GMT time. Okay, so lunchtime before the U.S. Open, and that's quite crucial. Even though it's a 3-day event, he will be on his feet tomorrow, lunchtime, 2 GMT, and this is what we are expecting. Whether he will give us a sign that there will be no tapering talks at all, or whether he's going to give some time frame. So that explains all these sideways movements and all this cautiousness that we have seen so far today. So let's move on. I'm not sure where you're referring to, which asset you are referring to, Sultan. I cannot tell you what to do, but what I can is give you my analysis and you can take your trading decision. Okay. Hello, everyone. Okay. Hello, Uzbatu. We have already covered gold, Vicky, but okay, I will do it once again. And if there are no further questions, I will call it a date. Okay. So gold, one last time. If there are no further questions, actually, I should have checked Facebook whether there are any questions there, but I cannot access it. Okay. Gold. Okay. Um, so gold is the daily chart, keeps posting another lower high. So overall negative outlook sustains. So this is in the medium term for daily, weekly analysis. Is keep posting a lower high, something that implies to a negative outlook and a further selling pressure for gold. Now, the last 3 days, it failed after it failed to break to move above the 1800s psychological level. It turned lower, so for 1 2 3 days in a row, it's in a pullback right now at 1780 territory. If I go back to the 1 hour chart, we can see that it retested my immediate support at 1783. Okay, but quickly turn above it. So as long as we don't see a confirmed closure at the bottom of at the top of the hour, below the 1783, then the asset we cannot really expect to retest the next and the most important support level at 1776. Okay. Uh, there is a quick turn higher again. So this might was the floor of the day. As long as the 1783, we don't see a closure of the actual 1 hour candle below the 1783, then a consolidation remains. Can you see that even Bollingers have flattened, fast moving averages are flattened, MACD has been flattened, so this implies to me intraday consolidation. Okay, but a break and a closure of the candle is important to wait for the candles to close. A closure of the candle below 1783 could see the asset retesting this 2 weeks, no, more than a week uh, support, strong support area 1773. And why I'm saying that is a strong one, because it's the confluence of So of the 38.2 Fibonacci level is also the 8 days low territory, daily fractal. And if you zoom into the 1 hour chart, it's a floor that has been retested several times but hasn't broken the last week. So this is a strong support level for gold. To the upside now, um, as long as we don't see a shift above the 20-day moving average and a closure above it, not just a retest like what we have seen the last 2 hours, actually a closure, a decisive closure above the 20-day moving average, then the intraday outlook as the daily outlook as well remains negative for gold. So yeah, this is pretty much it. So consolidation is the theme of the gold right now. For those that are interested in 15 minutes chart, 30 minutes chart, I mean very, very short time frame stuff, you can see that everything has flattened. So there is a bit of indecision over here. But as I said, the outlook remains negative. Decline, 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 decline since the beginning of the week, lower highs, lower lows, and so on and so forth. Last questions. New Zealand dollar, the very last question. Okay, let's cover New Zealand dollar as well, and we are done for the day. So, okay. Okay, so let's not forget that it's a risk sensitive asset. Kiwi, it's a risk sensitive asset. So because we had risk updated this week, we could see that it rebounded, but it failed to extend this rally and is stuck on the 20-day moving average. So over here we have a mixed outlook in the daily chart. So positive stochastic, negative MACD, RSI stalled at 50. So this looks to be a limited rally. So it seems that this rally that we have seen the past 3 days is running out of steam as long as and we don't see a closure above and a shift, completely a shift into the upper Bollingers. So for now, is neutral. It looks that this rally has run out of steam. It has reached its end. Now, intraday. Intraday, still neutral, I'm afraid. Mlanvo, sideways, came slightly lower in the European Open, turned back to the middle line and is moving sideways since then. So what you have to do is just identify your support and resistance levels, and if it managed to break one of them, then the whole outlook will be clearer for you. So a break of 69.80, so a break to the upside, which is our latest high, latest up fractal, but also the upper Bollinger. So a break of this level could suggest a rally and a retest of the 0.70 or even 0.7030 territory. Now, a turn lower and a breakout closure below the 0.6940 territory could open the doors to 200 period moving average, 200-hour moving average, and the round 69 level. For the time being, is ranging. So as long as we don't see a decisive a breakout of the support or either the resistance level, uh, there is nothing to be mentioned unless if you're trading in a 5 or a 15 minutes environment, which things are quite different. But no, actually they are not, because they have flattened so this is a 15 minutes chart, flatten, pointing to the right hand side. So this is consolidation. So if you're like to trade New Zealand dollar, then you might consider shifting to short term time frames and to keep an eye on the fast moving average, so the 5 and 9 exponential moving average for any bearish or a bullish cross. For now, they are flat, so that implies that it has stuck, it's moving sideways. Thank you very much, Vicky, for your comments. Really appreciate it. So this is a final call for questions. Otherwise, I will call it a date. Tomorrow, Stuart will be live to actually a bit to do a technical analysis and in general market analysis as we did today, but he will also make a briefing of August performance, because it's the last Friday of the month. Okay, so we might see a lot of repositioning. So people ready to diversify their portfolio, to close positions in order to reopen on the beginning of the September. So yeah, tomorrow Stuart will do another live analysis. So feel free to join us and ask anything you want. Thank you very much for attending. Hope you're having a great day ahead, and see you again tomorrow. Bye bye.